So good evening to all of you. Sorry for the data points all suggest that no interest rates are likely to be on the upswing. US CPI also came very high. It came closer to 8.6%. So this has kindled fears that no, the Fed may even raise rates more than what is expected, because tomorrow is the FOMC meeting. The general expectation is that it will increase. They will increase it by 50 basis point. But considering the strong data, there is now a revised feeling that the interest rates can even go up by 75 basis point, or they may try to shrink the balance sheet faster, which means more liquidity will be withdrawn at a faster pace than what they initially planned. So these things have unnerved the market, and the US S&P, which is a barometer of the global equity market, has fallen. So we have seen the chances of the interest rate hike going steeply is very high, which is not good for the equity markets. So there is a general fear that the equity markets can fall much lower, and there is the S&P which went up to 4818. That was the highest in recent this particular year. So so a 38% retracement of this entire move of 4818 probably could put it around 3000. So now it's around 3700 levels or so. So there is a fear that it can come down as much lower to 3000 levels. So if that be the case, then Indian equity markets also will have to slip. That's an inevitable consequence of that. But whether that will happen, it all will also depend on data as well as development. Suppose if the Russia-Ukraine so the fall has to be properly used for building your investment. But for trading, what we have seen, the characteristic is that every day there is whatever the decline happens for the entire day's decline happens in the first 15 minutes or so, and after that it just goes into a sideways, that is a little bit down, then goes up, comes down. It happens like that. So mostly the trend following system, in the case of intraday, it's not fruitful. It's not that fruitful. That's what I would like to say, because otherwise, even if you go for a smaller time frame also, of even a 5 minutes time frame or 15 minutes time frame, it's not that easy to make money because of the sideways motion and the rapid movement at which it is moving. But at the same time, if you are on the right side of the market on a closed basis, the next day there's a good chance that you will make good amount of money. Okay, and then after that, what you should do is that you better even close the trade and enter into the trade maybe after 2:30, depending on which direction the market is, and leave it there. So this is how the entire situation is. So let us look at from all these points of view to develop a cogent trading system as far as Nifty is concerned, because Indian markets have a long break. 3:30 we close, and then next day morning we open. So there are a lot of global developments that take place. So inevitably, either we have the market opening on the upside or market opening on the downside. Some days we have seen on I would say in a bullish time we have more of gap ups, and in a bearish period we have got much of a gap down trade. So since we are now trading below the 200-day moving average, 50, 20-day moving average and all, so at the end of the day, I think it makes more sense to literally be on the open side, on the short side of the market. So that's a general call that you can take. But those who don't want to trade but only want open position, but who only want to trade intraday, you have to find some mechanism where probably you don't get whipsawed, because any trend following system in Nifty right now, it looks as if that in the during the course of the day, that is during the intraday session, doesn't prove that to be that profitable. So we'll just look at the chart now. See, this is the total this overall chart. We have just highlighted this particular from this peak till today, whatever the low that we have got it. So if you want to make a projection of what is likely to happen from if it starts going down, okay, we have already highlighted that what are the Fibonacci ratios. Okay, so 23.5% is the first one that we have already talked about. So the Fibonacci right now, so let us say this is I 18,604 and the last low was 15,671. So this is around approximately 3,000 points, right? 18.6 to 15.6, around 3,000 points. So if you talk about at 23.5% for this entire thing further down, let us say, then that means 3,000 into 3,000 3,000 into 0.235, right? So this is something like 700 points or so. So 15,700 minus 700. So are we talking about 15K, where the next most important support can come? So this is the Fibonacci thing that we are keeping in case if if there is a further fall down from 15.7, highly likely that it can hit 15K. Now before that, of course, in the chart we may have some other support levels, which is this place. This is the 14,000. Sorry, so this place which is 15,513. So this is 15,513 is one support level, and because there is multiple support closer to 15.4 to 15.5, so that could be a first dip down where it can get some support, but eventually it can also break down and we can even see a 15,000 possibility. At the same time, we will put the Fibonacci from this level, from the pre-pandemic, that is the pandemic low to the high right now. So that comes to 14,350. The 38.2% retracement now comes around 14,361. 14,361. Okay, so this is the 38.2% retracement comes closer to the 14,361. Now we have already talked about the Fibonacci fan also, no? Because in Fibonacci we got Fibonacci fan, we have got the Fibonacci ratios, we can use Fibonacci moving averages, all those things. The Fibonacci fan is one advantage, because it uses both the numbers ratios as well as it uses the time period also. So both are combined together. So let's see either the Gann fan or the Fibonacci fan of how it comes down. Now let's say we'll go to the Gann fan. So now, if you look at it, the support now. See, this is the area where Gann fan is looking at support closer to 15,003 in this month. If you see, this is the weekly chart. So I think probably we are looking at something closer to the 15,300. So right now this is coming closer to the 15,300 levels is where the Gann fan is coming. So now we'll look at the Fibonacci resistance. So you can see multiple times whenever it comes closer to that place, it takes some support. So the first support that we can probably look towards is what we just talked in the Gann fan also. This is the 15,300 levels. So 15,300 levels can look towards giving some important support. Failure which I think we may have to look towards a big drop, which could be heading towards the much lower level. So I think the first important thing that we see from this particular place is something which is closer to the 15,300 mark. But sometimes as we see some dips which takes place below that particular line, so there could be a support which can come from 15,300 to 15,000. So we will place the support closer to between 15,300 to 15,000 for the next bounce to take place for 1,100 points. Now we have seen almost the most of the bounces which take place are around the 1,100 points. Okay, so from 15,000 or 15,300, we could still see something like a 6,000 to 1,100 points, meaning that 16,100 to 16,400 can be revisited again. So that is the way you can look at the big picture analysis of Nifty from the Fibonacci position. Now, so we have used in this case pivot points, which are very clearly the biggest pivot points right now. But this is to only give an assessment of the overall situation. Probably for those who are looking for investment, they can look towards starting their investment, probably doing the dip between 15,300 to 15,000. Okay, and then again probably if it even still goes down, then to come very closer to this place and then do the investment. That is somewhere here also. Okay, so that may not happen that fast, but I'm just saying that in case if it happens, you can go for that. So now we will look at the slightly the shorter picture of the market right now. So we'll remove this. Now let's look at the daily chart for using the Fibonacci as well as the hourly chart. Now even in the daily chart, if you see the situation is like this. See this place is on 16,000. This is this low is 15,735, and this is 16,790. Again, more than 1,000 points. So 1,000 points even for a 23.5% means 235 points. Now generally speaking, this 1,100 points is a very common thing. It is happening as far as Nifty is concerned. There could be a rally or fall which could be around 1,100 points and then a trend change taking place. So that particular number, we will come to that later on. But even for 1,100 points, 23.5% is 235 points. So 235 points, is the stop loss, minimum stop loss if you go for the Fibonacci. Okay, you have a smaller this one that is coming right from a very big monthly thing. Right now we are looking at the pivot points which are 1,000 points apart, So that again becomes again a non-tradable thing for most of them, because 235 points itself is too big. So we ideally would like to keep the stop losses somewhere around say 50, 75 points, 80 points in Nifty, because it becomes much more easily recoverable, right? So I think even 235 points we are not too keen to use the Fibonacci pivot points. So that is how you keep filtering based on your expectation of trying to beat the market of a buy and hold. That's what I said importantly. If you use if you use such a big point, then the case number of trades will be less, but the result will be on par or even worse than a buy and hold strategy. Okay, so then in that case, what is the other pivot points that you can that you have to use? So you have to use probably something which is much lower than that. So in that case, you look at the pivot point. See, this was one. The next important pivot point was this, right? So this was I, and this was the next one. So let's look at this pivot point now. Today, if you look at the from this place, from this next I, see, today it was 15,860. From one I which is lower than that 1,000 points, right? Because there is another pivot point which is there, a smaller pivot point, of course. So we have drawn the Fibonacci retracement from this I, which is 16,514. 16,514 we have used it, and we have drawn this Fibonacci. So that has come closer to 15,860, and that is where it took the it got resisted. So probably you have to look at if it starts crossing this 15,860, then in that case it may go to 15,982 or 16,082, or probably a 23.5% retracement from this level to this level. That is also possible. So let's look at the other areas of Fibonacci right now as far as this is concerned. So now you got 15,860, and that is 200 points, right? 15,660 to 15,860. This is 200 points. So we have brought it down slightly lower even now. So, but it is still not very comfortable as far as the from the trading point of view is concerned, right? So in that case, we need to see how what better that we can try to do. So in that case, we may have to look only towards probably using just one day before what happened. So this is, suppose it is today, then yesterday what happened? Okay, whether we can use only the Fibonacci of yesterday's candle. So this is not a very great thing, because one thing is that it is not a very it is not a pivot point. It is not a pivot point. So we need to see what are the pivot points from where you can draw. That is, yesterday's high is cannot be called as a pivot point at all. But still, a lot of traders use it for intraday trading, because normally you have the standard pivot point which you use for mathematical formula calculation, right? So there is a Fibonacci pivot point calculation also. So that also can be used. Or normal Fibonacci itself, in the normal sense, it is used. That is using yesterday's high-low thing, and take the ratio of that difference and plot the Fibonacci in order to know the resistance and support points. So that is also an alternate way of doing things, but it doesn't turn out to be that accurate. So always it is better to use some sort of a pivot point. So let's look at whether we can go for an hourly pivot point, or yesterday this one was the see, this is the given for hourly pivot point. So this was the one which is the 16,492. From there only you would have used it to such time there was one pivot point here. So then it was it's here. So from this place to this particular pivot point you can use. But the swing difference, if you see, this is a difference which is 15,820 to 15,684, which is something like 130, 140 points. So in 140 points, if you use a 23.5%, it will only 30 points or 35 points. There could be many amount of whipsaws also, that is also possible. So the ideal thing will be to take something which has a pivot point which is closer to something like 200, 250 points. Which is something closer to 250 points is the most ideal thing. But we are not getting such a formation here. So this makes difficult sometimes to exactly use where that, because the stop losses are if you use a bigger Fibonacci, the stop losses are wide. Okay, so in that particular case we have to only use some sort of a number or ratio from a particular low. So what is it that is comfortable for you? See, Fibonacci number, it is 55, 89, so 144 is like that. So whether we should use one of those Fibonacci numbers based on which we have to use it. So for example, let's say this is the fall, which is 15,820, and this is it went down to 15,684. So it is 15,820 minus 15,684. It was 136 or 140 points. So basically, you use the next 38.6% is around some 89 points or so. So in case if it starts to rise from 15,820, then it minus 89 points. So 15,820 minus 89, it comes to 15,731. So after it fell down, you have to after this fell down to this particular level, okay, then you use probably a 15,731 as the place where probably we have to put in a stop loss. Question is that if you have the Fibonacci ratios 23.5 or 38.6%, which one you have to use will depend on the swing point that you are taking. Suppose if you are taking a swing point which is only less than 250 points in Nifty, that is 150 to 200 points, it is better that you use a 38.6%. If you are using something like a 250 point swing points, pivot points, then in that case you can go for a 23.5% retracement. Now let's look at this chart from a smaller, even a smaller time frame of 15 minutes. See, yesterday it went up to 15,820, and I told you that once it starts to move above 15,731, you can probably look towards putting a stop loss, right? So this was the, in fact, this low is also 15,745. So 15,731, you could have put a stop loss, okay, for the move for up to this downward, whatever happened. 15,731 is a stop loss that could have put. Now, once it started to rise from here, once that stop loss was clear and this high was taken, then this is 15,684 and this is 15,804. It's only 120, 125 points. So probably again you have to use a 38.6% retracement, which means around 40, 50 points from this particular thing you have to put in. And today, of course, there was a gap down. I think, gap down point. So in that case, we need to, we couldn't have done anything. If there has been an open trade, then it would have just got stopped out. So the first thing that you need to do is that identify the pivot point, which is at least some distance, but not too far off. So at least identify nifty pivot points, which could be around 250 points or so, where you can use a 23.5%. If it is less than that, then probably use a 38.6% retracement. Because if you use 61 point or 78.6, by the time you will evaporate a considerable amount of this one. So depending on the swing, the points that have taken place of risen, you have to use a particular ratio. That is where it is important, because you can't say that every time you should use 23.5, you should use 38.5, 550 or 61.8. If the pivot point difference is going to be more than 250 points, use 23.5. If it is 150 points or so, then in that case you use a 38.2%. Okay, so if it is going to be less than 100 points, then in that case you use 50 or 61.8% retracement, like that. So depending on the type of swing points that you are going to get, you should use this. So now in this case, after today's rally, today you just see there was a rally from 15,659 to 858, so 200 points approximately. So you can use a 38.2 or 23.5% retracement. So let's draw the Fibonacci for this from this place. The 23.5%, it started when it started to fall. From there it just fell. So that means anything about 200 points, you have this 23.5% is okay. So here, this 23.5, it started to fall. Okay. So now, so once it started to fall, then in that case you need to look at the counter Fibonacci from here. So from here, what is the difference now? If you look at it, 15,856, and this is 723. It's only 130 points. So if it is 130 points and all, it is better to go for 50% or 61.8% retracement, right? So in that case, we'll look at this. Look at the 61.8. Just it held on to 61.8%. So very clearly now the swing points now are decided. So which ratio that you want to use, which ratio that you would like to use, now will be decided by the number of swing points between the pivots. That is one. Alternately, if you have all the problems in all this thing, just use 61.8% in all places. Okay. Now let's say let's go like this. Now 61.8%. See from here. So any fall now below this, okay, you are short. That's all. Okay. Now from here, that since 61.8 has been broken from this level to this level. So now you use the 61.8% retracement, it will come same place, right? Something closer to this 61.8%. So that's all. So you use the 61.8% everywhere. Now today morning also, if you look at it, the see from this high of yesterday's close, once it started to cross 61.8%, so there was a 78.6 was there at 15,770. But once it started to cross the 61.8% retracement, then it went up higher. So 61.8%, sometimes in case 78.6 comes, but you can use the 61.8% retracement as a move to look towards your between in the hourly chart itself. So that way, no, the this is a 15 minutes chart, but in an hourly chart, the same thing, no, from wherever pivot points that we have drawn can be used in the case of an hourly chart also. So now we look at the Bank Nifty. So Bank Nifty, let's look at the slightly bigger time frame. So daily chart. So from this place, you draw the because this is the last pivot point. So we'll draw the Fibonacci from this. So it did not cross the 23.6% retracement. So that is the slightly bigger stop loss that you can keep, right? Now let's look at the hourly one. Okay. Now it came down to 78.6% and just started to jump, right? So the first stop loss now here it was C, if it's 61.8, and then after that it started to fall, right? So now we can keep that same 61.8% in the top from this place. So that comes 33,441, right? So if it starts to go above 33,441, then in that case we can say that we can look towards removing our short position and go on the long side. So this is a slightly shorter time frame Fibonacci that we are using, which can be subject to some sort of more whipsaws compared to the bigger time frame. But the bigger time frame has the one disadvantage that it will probably take off a considerable amount of profits evaporated in case when the market starts to rally back. So this is how the Fibonacci's are used in a trading system from a bigger time frame to shorter time frame, and you have to know which time what sort of a minimum percentage of this 23.5%, the number of points, whether that is acceptable for you or not. Depending on that, you have to go to a lower time frame and use the Fibonacci on that particular lower time frame to know how to trade on that. So this is the crux of the Fibonacci trading system. And let's look at probably the so look at gold. Look at the daily chart. This international gold price. Gold is generally quite a choppy thing. So again, this will depend on from where to where you're going to put in a Fibonacci. So let's look at the Fibonacci from various places. So let us say this was the last pivot, right? So this was an important pivot, and based on that, based on that system, you would have gone long about 61.8% of this, right? So that's all. Now let's remove this. So since from this place to this place it was cut here, we can use either from this place or probably you can use it from this place. So whichever way you want to use it right now. So let's look at this. So based on this, based on the bigger one, the 61.8% retracement has just been broken, okay, and it is just coming to 78.6, which is 1806. So any rally probably since it has broken from this particular level, this has broken 61.8%. So from year to year, whatever happens, then 61.8% retracement should not be broken. It should not be broken for the trend to be intact. So let's look at this. So right now, from this place to the this one 61.8 comes to 1852. So any rally up to 1852, if it happens, then it's a chance that it can get sold off again. Then only if it starts again going above 1852, then in that case we have to presume that the trend is again shifted to be on the higher side. Then we need to draw the 61.8% from this level to that particular level. That's all. So from wherever to wherever, from whichever pivot to another pivot that you're taking, if that level is broken, then in that case, no, you have to consider the reversal of that particular Fibonacci pivot points for consideration of the trend. That's all. So that is how we should look at it. And if you look at the bigger time frame, let us say from this place, see this is 61.8, it just held on. That particular place was there at 61.8, right? So the trend is on the downside. That's how we can presume. So now, even if it goes a little higher, this can meet resistance anywhere up to the 61.8%. It can meet resistance anywhere up to this place. It can meet. So the first important places of support was here, and after this there could be a resistance coming closer to 1894 to 1900. Then probably we will have resistance 1926 going right up to 1960. Okay. Now, the reason why we are saying that it can have the rise will be will have its own problem, is that because if you look at the Fibonacci from, let's say, okay, so if you see this 16.8% has been broken, right, from the last important low of 1660 or so, the 61.8% low has been broken. So that means any rally from this place to this place will definitely have its own resistance coming closer to that place. So that is how the decision is taken regarding the particular point of a trend. But this is a quite a big trend that we are taking. So it will all depend on as I told you, the smaller trend list we take from this place to this place, then it is broken. So from now you take from this place to this place, whatever, say from 1852. So from 1852 if it goes up, then just monitor for that. So you have to split that time frame of a bigger time frame into smaller time frame pivots and trade according to your own comfort. So that's how normally the Fibonacci's are used, and this has to be used in conjunction along with the of course the pivot reversal or moving average. But we have to look at the each chart's characteristics, because even gold, which is a major asset market, in a daily chart, this chart doesn't look that good as in a trend on a trend basis. So doing a pivot reversal strategy even in a gold in a daily chart is not that easy. So we have to look at slightly bigger time frame to understand the overall trend, but not to trade on that. See, for example, now this is a clear downward trend. This is a clear downward trend. So that means when you say it's a clear downward trend, how do we use it, the Fibonacci? Now, the reason that we are saying is downward trend is because there's a lower bottom compared to this bottom, lower top we are getting, and this particular low has also been broken of 1825 has also been broken. So any rally right now from 1879 to this particular place should get resisted closer to the 61.8%, and it should not exceed 1879 or 1880. So that's a general call that you can take as far as gold is concerned. Even a weekly chart in gold right now doesn't look that good. So let's look at a monthly chart. So the monthly chart gives an impression that it's an higher top, higher bottom, higher top. So this is the last important bottom that we got. Probably we can use this or we can use this. Okay. So let's look at the important trend change point was from this place, because this is the place, this is the most important low, we can keep it. So based on that 61.8%, so we'll draw the 61.8% from this, and that has got broken right now. That has been broken. So the 61.8% has been broken. So the last peak we have to take as an important peak, and any rally will get normally sold. So whatever that we are using it in a bigger time frame, the same concept, please use it in a smaller time frame to get a trading system which could be according to your comfort. Okay. So any questions, please ask. Thank you. Nifty this month trend is going to be already it's down. So we already spoke about Nifty. We said no, the if it breaks 16,414, then we are going in for a fall, which could probably eat back 15,700. Right? This is what we said last week also. And we have seen this. This is the third week right now. It's happening. It's not even complete, and we are seeing a bigger fall. So now, normally, as per the option premium at that point of time, normally we have 1,200, 1,300 points is what the high to low happens. And also on a close basis also, we should not expect more than 1,100 or 1,200 points on a close to close basis. That's how we discuss. So last month close was 16,000, 2 weeks back close. That is on, I would say, on 30th May. 30th May it was 16,584. Based on this, I presume that probably we should be close basis for this month should be more than 15,385 or so on the downside. So any fall which is below 15,380, 350, 380 should be bought. That's what I feel, because it is overdone. It comes into overdone territory. If there is a panic, then yes, it all happens. So, but no, that's a level from where you can see some bounce back of another even 1,100 points. So, or the close, even if it goes a little lower, the close will be above 15,380 or 350 levels in this month. So, that is the opinion that we have as far as the Nifty is concerned. But nevertheless, the overall indication, no, on a weekly basis and all, looks to be very uncomfortable. So any rally, this has to be sold, and the important place where we can sell is this particular place, where if it goes up, then 16,402 is a good level, because it has now come down below this. So we don't expect this to be taken off. So I think we should any rally which takes place up to 16,400 or 16,300 is a sell. But whether that's going to come or not, it's not known. And after that, the fall, if it takes place right now, the support comes to 15,000. The first support now exactly 15,513. But even there, the close is 15,763. So we we have 15,450 to 15,500. There's a multiple support levels which exist closer to 15,450 to 15,500. So I guess that there can be some dip below that, but there can be a recovery on a weekly basis also to close above 15,450 or so. And on a monthly basis also, we expect the close to be above that. So this is as far as Nifty is concerned. Option selling, I think we will have a separate session. I think it is better not to attempt any put option selling right now, because of the overall situation not good. And we last week advocated that closes, if there is a rally close to 16,600, you go for put buying. And that day when we spoke, it was 16,480 or so, and there was no further rally, and it started to fall from there. But we are very clear right in the direction that no, it is better to take as far as the put buying is concerned, and even if it means 275 rupees maximum loss, it was better to take that, and it just happened to be correct. So right now, let's wait for some, let us see some pullback. If it comes, then in that case we can go for put buying. That's one. Okay, thank you. So thanks for your participation. Hope to see you again on Friday. Thank you very much.